another storming week for Tesla, up 4% in the last 5 days. So you can just imagine TSLY also being up, again, not beating the overall underlying, but up 3.27% in the last 5 days. Now, with Tesla and TSLY both being up, there is no reason why my TSLY synthetic ETF is also not up. Unfortunately, it wasn't as high as TSLY at 3%. We finished it at 2.43%. However, it is the highest return that we've had to date against the capital for that week. So in this video, we'll go through my projections, my total dividend, and then we'll also go into where the pivot is for next week and how we're looking from a technical analysis for Tesla. Again, all I ask for is that you smash that like button and don't forget to subscribe. Now, for week 8, we obtained $611 in total dividend, or $6.11 per shares. And if we have a look at what we did here in week 8, we sold the 197.50 covered call, and we initially had $44 estimated for week 8, but you can see here we ended at 611. So how did we manage to do that? Well, again, this premium strategy is all about trying to capture the covered call premium, but also stock appreciation as well through the synthetic option. And again, if you are brand new to this, the first link inside the description or in the pinned comment will go through all of this and how this is all set up and how we can capture those gains. So even though Tesla went up in price, my covered call actually made us $70. So we sold it for $245 and we bought it back for $70. So we $173. So we made $70 on the covered call. Now for the synthetic, because Tesla's trading at $199, I had a $192.50. So what I decided to do, as you can kind of see over here, is close out the synthetic and reestablish at the 200 strike. So because we made some gains in the appreciation of the shares, because we capped our gains at $197.50, we managed to capitalize on $542 in quote unquote share appreciation, plus the $70, giving us that $611 of total premium or dividend collected for week 8. And what that does is takes our total dividend paid since we started back in the 22nd of December to $3,609, which again, if we reinvested the total dividends, will be down 14%. And because I've been taking all the dividends out, we are down 21% in the overall portfolio. And again, that's because Tesla, since we started over here, has been declining. It's now consolidated and now getting into the gap that it left for earnings. So we'll go on to this inside a second, but just for those who are new to understand why are we down on this overall position. So if we have a look at where we're projected to make just over $23,000 against a starting balance of $30,000 in terms of dividends, which is a dividend yield of 77%, which is absolutely crazy. So let's have a quick look what we did for the coming week. And again, we've got Mondays off. I think it's President's Day, so the market is only open for 4 days. And as I mentioned, what we did is that we closed out the synthetic. So I kind of reestablished, a couple of hours before the market closed. I reestablished at the 200 with the 8th of March expiration. So again, trying to get to as close as the current price as we possibly can. So we're currently sitting on an unrealized from a stock perspective at $5. So having the 200 synthetic, I sold the 202.50 covered call or synthetic call, however you want to describe it, for $361. Again, if you net out commissions, it's $359. So that's what we're projected or we're estimating to make, which is, again, this is just meant to be in white, actually. Give it that. And that is meant to look at 1.43% of the current balance that we're there. So again, kind of in the middle side, as Tesla was dropping. But again, as Tesla picks up, we're trying to capture that share appreciation along with the covered call income as well. So again, I could be selling calls at the 200 strike as an example. I'll pick up more premium, but then I'm leaving around $250 on the table in terms of share price appreciation or the synthetic share price appreciation. So that's kind of how we're looking on that front. Again, I really want to stay above 50-60%. That's kind of the goal here in terms of what we want to do. And at some point Tesla has to continue to slow the decline that it was. So again, I started probably at the wrong time. This portfolio here with it continually going down. I probably should have done something like Coinbase, which just continues to rise, but we are where we are with it. And so if we have a look at what's been happening, again, for those who are new, I like to use the weekly pivots as kind of good natural targets or support and resistance zones, all these kind of good things. And you can see here that we've got 1, 2, 3, 4. The last 4 weeks pivots have all been hit. And again, with that earnings drop, as I mentioned here, we kind of found this bottom around the 180 level, and it kind of meandered within that kind of range, and it's now broken out of that range, as you can see here. So we are a bit on the overbought side of things. I'm expecting for Tesla to come back down, hit the pivot level, and then it's going to decide whether it wants to try to retest these lows or continue this overall trend and continue to make higher highs effectively. So we should see what we've done. So I didn't want to go too far out, to the 205 or something. I think the 202.50 is, what's the range of that? So we look at that. The high of that is 203. So it really just has to retest the kind of last high it's made. But I do think it hopefully will bounce off here and continue to rise. So as it continues to go up, the premium or the call income, covered call income, will increase as Tesla starts to go up. And then what I can do is then hopefully do a bigger gap between the 200 and the 202.50 that I sold to get more of that price appreciation. So overall, again, this is what happens with these kind of positions. As long as you're trading it on a line that has volatility, but also, at some point it's not going to go to zero. So as long as you can manage that piece, your premium that you collect or the dividend that you collect will be reflected. As you can see, we were doing $4, and then that can continue to drop throughout those 2 weeks when we continued to drop, and then we continued to drop even further. And now we're starting to see that share appreciation and that covered call income both combining together, which is the piece that we kind of need, where I think this was 25-26% at one point, and it was around 16-17%. So again, we are capturing those premiums. So we should see what next week brings us, but this is the process that I'm going through of trying to replicate the yieldmax ETF, the TSLY fund, which, doing it yourself, I think you can make a lot more money because we are outperforming TSLY. We're not obviously outperforming Tesla, but we are, when in the downturn of Tesla, we are capitalizing where Tesla's down around 21% versus the 14% because we're doing this type of strategy. So again, you do have the full downside risk, but on the flip side is you are protecting yourself slightly with some covered calls income against it. So depending on what you're doing with this $3,609, I could have bought some Tesla shares, which again would have slowed down the growth and, increase up my unrealized element here. So therefore this number would have been lower. So there's many ways you can do it. And it really depends on where you are inside your life. Do you need this 3.6K? If you don't need it, again, reinvest it back into the portfolio, into different stocks, different shares. So again, if you want me to do a kind of video on that piece, just comment down below, and I shall see you guys in the next video.